So this video is an important one because we're going to hit on a few really important topics here, but it's all going to be centered around Airbnb. But before that, welcome back to the channel. My name is Forrest. I invest in stuff and you should too. Stick around long enough and you just might get rich. Today we are talking about Airbnb and really answering the question, should you get in post IPO? So for anyone who isn't aware, Airbnb just IPO'd within the last week and their stock price has skyrocketed, absolutely skyrocketed. So their IPO price was supposed to be, I think, $68 a share. Now it is well over 100. And we're really gonna break this video down into three parts. Number one is just looking at the numbers. Number two is looking at the company in reference to that. And then number three is how do we make money off of that, right? The really important thing, really don't want to make you wait. So if you wanted to skip to number three, go ahead and do that now. That is near the end of this video. Before we do jump into number one though, I appreciate you stopping by. I'm trying to get to 10,000 subscribers and you could be the next one. So please take a second, go down, hit the like button, hit the subscribe button. I greatly appreciate it. So first, the numbers. To do this, we're going to take a look at their S1 filing. Guys, I'm really a huge proponent of just taking a look at the numbers. It only takes a second. As investors, we have to do our due diligence. I see so many people in comments on other people's channels and even on my channel, really just with uninformed opinions. And it's really easy to tell when someone has an uninformed and even just a mildly informed opinion, because there are just some really concrete facts out there. But to get some of these facts, we're going to take a look at their S1 filings. If you need help or if you don't know how to find that, all you have to do is literally Google the company name and then S1 filing, and this will pop up. This is a great thing to do when a company first IPOs because all of their financial results prior to the IPO are likely private. So I'm not recording my screen on my iPad. We're looking here down at the selected consolidated financial and other data section. And let's just take a look at a few line items. Now, when we do this analysis, we don't have to get too deep. We'll keep it pretty high level. There's a lot of really useful information that we can glean just by looking, for example, at this top row where it says revenue. So 2020, looking at the right side here, we can see they had $2,518,935,000, right? So really that's billions of dollars, 2.5 billion. 2019, they did $3.6 billion in revenue, almost 3.7. In 2019, they did 4.8 billion, 2018, 3.6, etc., etc. So if we take a look at this from left to right, we can see that the revenue was going up and then it started to taper off and is actually coming down here. If we look at 2020, the 9 months prorated, they're at $2.5 billion in revenue. If we take a look at the next line, where under it says costs and expenses, the cost of revenue, $902,000 to $666,000. We can see that that is pretty much, I did the math there, it's about 25% efficiency is the same. So the efficiency of the money that they're making has remained pretty consistent in the last few years, which is good. You'd like to see that improve over time, right? Especially if they were profitable or if they want to achieve profitability. They're still not profitable yet, but we're going to dive into that. So everything else here is pretty useful. I think the other important line item to look at it as a company like this, right, is they're very just internet driven. If we look at their sales and marketing line number here, 545,000 in this case, a little under $500,000. And if we look at the prior years, they're over $1 million or $1.6 billion in that case. So 545 million, in 2020, and if we go back a little over a year, you can see that they're spending much more money. So they've actually cut back on their sales and marketing, which is pretty interesting considering the times. There's a few ways really that I would look at this. One is that they cut it back because people couldn't travel, or they didn't think that money would be well spent. I did see, personally, I use Airbnb quite a bit, and so I was looking at booking some things, and things were booked up for like the next few years. And so maybe they also saw, hey, people are using Airbnb so much, we actually don't even need to advertise anymore. Like, we'll just let it run itself, despite the fact that the revenue ultimately is down. So wrapping up the numbers, let's take a look at just the bottom of this sheet here. Let's look at their net loss. The net loss of $696 million. Not a profitable company. Many startups aren't profitable, so not too surprising there. But there is some concern there in terms of what their business is and really what they're trying to achieve, right? So people say that Airbnb is the Uber of, hotel stays or vacation stays, right? But what's really interesting about that is that Uber is hemorrhaging money. So when I hear that, I'm not like ecstatic. And I love Uber as a business, or as a consumer, I should say, I love Uber. Looking at Uber as their business model and using my background as an engineer and thinking about how are they going to like generate margin out of this, I think that the boat may have already left for Uber, but we'll talk about that in an Uber specific video. I think in terms of Airbnb and really where their upside is can they create a model that society accepts and that is profitable? One of the obvious pushbacks, and it's legitimate, is if I'm a small town, some small coastal beach town, I live there, right, and everything's affordable. There's nothing really great about our town. It's obscure. It's just a small coastal town. But then suddenly, a bunch of Airbnb investors come and hype it up, and they say, hey, we're going to buy up all this property, bring in a bunch of tourists, etc. The prices start to appreciate. Locals or people that live there can no longer buy property or cheap beachfront property because now it is all being renovated and flipped by outside investors. Some people would say, hey, that's good because we're improving the state of the economy. But if people aren't living there and prices are appreciating and you're squeezing people out, it's actually going to force the population down. And what you're going to have is kind of an empty ghost town now that's only full of people coming through. Now, that's just the way that the game is played. But like I said, people do not like this a lot, right? And we've already seen the battle starting to play out, people pushing back and making regulation to where you can't have Airbnbs in certain like buildings, things like that, right? So it's certainly a huge risk for their business model. And seeing as how they're still not profitable, I'm curious how they're going to solve this. So this brings us into number 2, the companies, right? So Airbnb, obviously, they don't own anything. Their entire business model is you as a host, you sign up, you buy some property somewhere, but it's up to you as a host to manage your cash flows, do the marketing even. And really Airbnb is just a market maker. They connect people who are providing a service with people who want that service. They facilitate communication, they provide some assurances, but that is really it. They're just a platform. They don't own any of the thing that is generating money for the business, which is interesting and nuanced. I think, again, if we look at them versus Uber, and what's interesting about this is that Uber actually plans to have their own taxi service, right? We know that that's part of their business model. They're going to own the means of production at some point, which I do think is an important delineation when you look at the two different companies. Airbnb, as far as I'm aware today, I might be wrong, let me know down in the comments, they don't plan to own anything. They're not going to go and start buying real estate, nor do I think that they should. I think that really the value is in individuals being able to advertise and create a niche kind of like, hey, come to my town because of X, Y, and Z. And I see the ad and it's like, if I didn't see this or this person wasn't advertising, there'd be no reason for me to go to like, obscure town, Tennessee. You just wouldn't, right? So Airbnb has value with that model, and I think that that's cool. But at the same time, they're completely dependent on people hosting or really being entrepreneurs on their platform, and then again doing that against the legal risks that exist out there, people basically regulating against them, which is already starting to happen, right? This isn't like some mysterious thing that might happen. This is happening in markets today where you're basically not allowed to do Airbnb or short-term rentals in general. But that is their business, and what do I think that their business is going? Today we see them doing experiences, so you can sign up instead of just staying somewhere. You can do like a boat ride or whatever, do a tour of the town. They have virtual experiences. They have all these other things that they're bringing on their platform, but their bread and butter really is the short-term rentals, which are great. You can go, like I said, I'm a huge fan of Airbnb. You can go somewhere and instead of staying in a hotel, you can actually have a whole house, do a kitchen, walk down to the grocery store, cook your own food, which sounds like more work, but when you have an actual house, you actually want to do those things. When I stay in a hotel, and I travel a lot, I've been all over the US, a few places in the world, and I can tell you that when you're in a hotel, you don't really want to go and get food and bring it back and cook it in the microwave, right? It's just not set up that way. So really that begets the question, why raise money now? And I think that Airbnb really is just looking at the market and saying, hey, equities are super inflated right now. People are paying a premium way over the value, right? Which is why I think we're seeing a few of the IPOs that have IPOs this year, including DoorDash, companies like that. And they're saying, we are going to take this cash now. So I honestly don't think that Airbnb is concerned with the price of their stock other than the difference on their IPO gap, right? So they IPO'd at, $60 and some change, or over $100. The timing of this video is going to be a day later, so the price is going to fluctuate a little bit, but they'll be over $100 still. But the idea is really that they're just trying to raise money for as cheap as possible, right? It's really easy to raise money right now if you IPO with a business that is even slightly popular. And that's really what I think it boils down to. I don't think there's anything complicated. I don't think that they needed cash. If we looked at their cash, so looking at their cash on hand, they have, $4.5 billion in cash or cash equivalents, right? Liquid assets on hand. So they're not hurting for cash. They're really just wanting to go out and raise this money to do whatever with. And that's prudent. We're seeing Tesla doing that. We're seeing a few other companies basically say, hey, we're going to put more shares on the market and raise money because the market is crazy right now and people are just buying stuff. So that leads me into my third point. How do we profit off of this? What does this mean for us? I'm an investor. I just want to invest in stuff. Should I invest in Airbnb? And I'm here to tell you, I straight up don't know. Am I going to invest in Airbnb? No, I am not. I will continue to use their services. I think that the core business model is great. They have a novel business. They're shifting the industry. I just think that, looking at the price movement and the value of their company and where it is, it doesn't make sense to me. And unlike other things, right? So I have an engineering background and maybe that doesn't even matter in this case, but just looking at their company and how can they use their platform to create better margins or to better incent people to use their platform or to do X, Y, and Z. I don't really know what the next phase looks like for Airbnb. And I think that's what's really hard for me to invest in them long term, outside of them just getting more hosts and pumping that up as much as they can. I don't see another model for them. You're probably saying, well, Forrest, that's like saying if a restaurant just sells more burgers, obviously they'll make more money. Yeah, and that's their core business. What I'm saying though is that Airbnb is being valued kind of as a tech company, right? And their revenues are not being valued as a real estate company at all. I invest in real estate, and that's not how real estate is valued. Real estate is valued very specifically on the asset class, and there's a multiplier on those dollars, right, based off the amount of money, the net operating income that it produces. Airbnb is definitely 100% being valued and looked at as a technology company, and I don't know what other tech they are going to produce. So, in my opinion, I think that they're overvalued, and I don't think that that's bad, by the way. I think that there are other companies that are overvalued that are still a buy. I put Tesla in that category, exceptionally volatile, but I can tell you that it is overvalued today, and it's going to be even more overvalued in a year and 5 years, and you might as well get in. That's my opinion on that. Again, just my opinion, not recommendations. Do your own research. But in terms of what to do with Airbnb, I would say if you have a strong thesis, if you think that the value, even though it's overvalued today, it can go up to $250 or $300, and you have a very strong thesis and reasoning about that, then, I'm a huge fan of long-term investing. I would say then go ahead and get in today, knowing that it's going to hit that in a few years, and then just ignore the short-term volatility. It is going to be exceptionally volatile. I believe their employees are going to sell their shares. All these other things are going to happen. But if you believe in the long-term value of the company, then go ahead and get in today. Don't try to time it. You will lose unless there's some news or something where it could take a dip. If it does take a dip, I would add, then go ahead. If you have that same thesis and nothing else changes, then buy more shares, right? We should always look at red days as good days to buy on the things that we're bullish on and the things that we have a strong thesis, hypothesis on long term. I just don't have that for Airbnb, but it has been very popular. I mean, I've used the service a ton, and it's kind of weird for me to have so much familiarity with the company and not really feel strongly one way or the other about it, I think is pretty interesting. I kind of feel, honestly, I kind of feel about Airbnb how I feel about Uber, in that they're one of the first to do it, and they're going to transform the industry, and they're just not going to be here long term. That's kind of my gut feeling, and I don't mean that with anything against them. That's just how I feel about it. I feel like, you know, Uber's done an amazing job. They transformed the world. Uber has become a verb. You know, you Uber places, but their business, I think they tried to touch the sun, and I think someone else is going to come in, probably ex-Uber employees of anybody else, and do it significantly better. That's my gut. Maybe they'll buy up the assets of these companies and chop it together as businesses do. But in any case, those are the 3 parts of this video. Again, if you're crazy and for some reason haven't subscribed yet, please do help me get to 10,000 subscribers. Share this with your friends. Highly appreciate each and every one of you. If you have questions or thoughts, leave them down in the comments below. I want to hear them. Let me know what companies you want me to talk about next as well. I'm trying to get to them. My schedule has been super crazy, so I went from like 3 videos one week to 1 video. Hopefully I'll get at least 2 out this week, but I am actively investing, so look for a review of my portfolio this far later this week, going into the tail end of the year, just talking about some of the things that I'm going to do, tidying up the rest of my year. I am also selling one of my real estate buildings, so I am going to shoot a video talking about that, kind of just reviewing the process. It's not going to be, you know, I won't be traveling down on site. I'm actually in a boot right now because I had Achilles surgery, so I'm not too keen to travel, but I will talk or shoot a video just talking about the process of disposing of an asset, specifically a multifamily asset, right? So what does it look like? How do you deal with taxes? How is it valued? Etc. But in any case, that is it for this one. I appreciate you stopping by, and until next time, stay frosty and Force Night out.